Hi everyone, my name's Emma, founder of The Broke Generation, and I'm on a mission to help people feel good about money, life, career and being a grown-up. I've teamed up with Credit Union SA to talk you through all the ways you can prepare your finances for a home loan. Saving up a deposit is one of the most important parts of your home buying journey, but there are other things to consider too. When you apply for a home loan, prospective lenders will assess what's called your borrowing power. It's an assessment of how much they think that you can afford to repay. To understand that, they will take a look at the last 3 to 6 months on your bank statements and see where your money goes. Here's what they'll be looking out for. Firstly, it's important to demonstrate evidence of genuine savings. Lenders want to see that you are able to consistently squirrel away a portion of your income. Generally, you'll satisfy this by showing that you've saved up your deposit, but if some or all of your deposit is being given to you by a parent or a family member, you need to accompany that with proof of your own genuine savings. Clean up your spending habits. Lenders won't write you off for having the occasional pizza delivery or oat milk latte, but they will be looking for responsible spending habits. Any seemingly reckless spending or a high portion of your income being spent every single month could be a concern. Other things that may concern your lender include buy now, pay later. While you might be a fan of instant gratification or a little treat after a hard day that you'll pay for in a few weeks, sadly, lenders don't tend to be. Even responsible use of buy now, pay later products could cause problems with a home loan application, so consider whether they're right for you at the time of applying. Gambling. Evidence of gambling on your bank statements could impact your home loan application. It varies depending on the extent to which you are gambling, but if you do like a bet, be aware of the fact that it could limit your borrowing power. If you have any credit cards, it's worth reviewing the credit limit. Even if you're a responsible credit user with a $0 balance, the limit could be what stands in your way. In the eyes of a lender, you could max out that limit tomorrow and be liable for the repayments, so they may factor that in when calculating your borrowing power. Investigate how your credit limits could be impacting the amount you can borrow. Get clear on your repayments. If you have a car loan, a student loan, or any other form of repayment that you are regularly making, pay attention to where these sit in your broader financial situation. Generally, it's not the balance of those loans that impact your borrowing power, but how much you are making in regular repayments. Even if you've only got 6 months left on your loan term, a hefty monthly repayment could make it more difficult to assess the loan you need to buy your home. In some cases, paying down that loan before you apply for your mortgage could increase your borrowing power. Keep a surplus of savings as an emergency fund. Owning your own home is an incredible achievement, but with it comes responsibility. You might be used to calling your landlord or your property manager or your parents when something goes wrong. A leak in the bathroom, mice in the garage, a malfunctioning dishwasher. When you own the property, all of those expenses become your responsibility. So it's important to ensure that you are going into home ownership well prepared. Aim to save up an emergency fund in addition to your deposit so that you've got a buffer for things that may need addressing when you move in. Then once you're in, you can work on strengthening that emergency fund over time by contributing small amounts regularly until it's at a level that you're comfortable with. 3 to 6 months of living expenses like home loan repayments is a really great place to start. Start planning for life as a homeowner. Calculate what your repayments might be, and if you're not already, start living like you're paying that each month. This is particularly helpful if you are living at home. It's also worth totaling up all the things you'll need to buy when you move in. Things like furniture and appliances can be expensive. Planning ahead for what you'll need and shopping around for the best prices can help you hit the ground running when you do buy. For more support and guidance on your situation, speak to a qualified home loan professional.